Since I started investing, I've read dozens and dozens of books about finance, money management, and investing, in the hopes that I can become a better investor and to become better at understanding money and finances overall. I've read books that go over the basic fundamentals to the ones that go over the more psychological aspects of how you think about money. As I've read more of these books, a lot of them surprised me and even made me question myself and some of the concepts I've learned from my time in banking and consulting for the last 5 years. And what I've learned through this process is far from what I actually expected when I first got into this. And it's fair to say it's even changed my mind completely on a few things. Now, these are a lot of books, but I've condensed them down and we'll go over the ones that had the most impact on me. And then I'll be going over the key takeaways that I've learned from them. Starting with the most famous and most well-known book, we have Rich Dad Poor Dad by Robert Kiyosaki. And this really solidified the fundamentals of money management and really is a modern day classic when it comes to investing. The story is about Robert Kiyosaki and his two dads, his real dad, who is poor dad, and his best friend's dad, who is rich dad. And it explains how you don't need to have a high income to be rich, and how rich people make money work for them. The book really does drill in the concept of how the rich acquire assets and the poor or middle class acquire liabilities that they think are assets. In the book, Robert describes how poor dad said that his house was his biggest asset, and that showed he didn't understand what an asset actually was. That's because a house doesn't generate income unless it's being rented out. So if you live in it, then it can be thought of as a liability instead of an asset. Financial aptitude is what you do with the money once you make it, how you keep people from taking it from you, and how you can make your money work hard for you. Another big idea from the book is that the most powerful asset we have is our minds. So having the correct mindset when it comes to money is so easily overlooked, and it's important to lay down the foundations and the groundwork. So this brings me on to the psychology of money. Some of the top points from this book is that money can't buy you happiness, but it can buy you freedom. Morgan Housel makes a point that building wealth often has little to do with your income and has lots to do with your personal savings rate. In the book's introduction, Housel tells the story of Ronald Reed, who is a gas station attendant and a janitor who eventually went on to become an investor and a philanthropist. And throughout his life, Reed gradually accumulated a fortune by saving what he could and investing in blue chip stocks. When he died in '92, he made headlines for being worth more than $8 million, much of which was accumulated through the power of compound interest. And Housel contrasts Reed's story with that of a highly educated, well-paid Merrill Lynch executive who retired in his 40s to become a philanthropist. Heavy spending on a lavish lifestyle that included 2 luxury homes eventually led him to file for bankruptcy. Through the two men's stories, Housel makes the point that financial success is often a matter of how you behave than what you know. The Psychology of Money is a compelling quick read that shows how the ability to achieve wealth often depends more on healthy behavioral skills than on intelligence, and that behavior is often hard to teach. And throughout the book, there's lots of short stories about people's money-making decisions. Another book about mindset is Think and Grow Rich by Napoleon Hill. It's a bestseller again and has sold millions of copies since it was published in 1937. It's more a self-help book that at its core explains the power of positive thinking and personal belief in achieving success. Some of the key principles of the book include having a clear desire for a specific goal, maintaining strong faith, and using visualization techniques. I think this book does generally divide opinion. The author does start out with saying that he's interviewed some of the wealthiest people around at that time, and then says he'll share what makes them successful. But in some ways, the book doesn't deliver on that, and the actual specifics and the nitty-gritty of things. The main message that comes out of this book is that he demonstrates how anyone with the right mindset and persistence can overcome obstacles and achieve their aspirations, making it a timeless guide for personal and financial growth. The next 2 books really do ground you in the important fundamentals and basics, and the first one is The Simple Path to Wealth. A great quote from this book is, "There are many things money can buy, but the most valuable of all is freedom. Freedom to do what you want and to work for whom you respect." The opening of the book explains the story of 2 friends. 2 childhood friends grew up and went their own ways. One became a powerful advisor to the king and the other a monk. When they meet years later, the minister feels bad for his friend. He says, "If you learn to serve the king, you wouldn't need to live on rice and beans." But the monk only replies, "If you had learned to live on rice and beans, you wouldn't need to serve the king." Now, this parable serves to make a single point. Wealth is not about power, luxury, or idling. It's about freedom. Collins thinks your freedom is the most important thing you can buy. And in this book, he offers a straightforward path to get there. What initially began as a series of letters to his then teenage daughter eventually became a best-selling book, selling some 400,000 copies. Part of its appeal is that Collins' approach is as simple as the book title promises. And according to him, building wealth is almost inevitable if you follow 3 steps. Spend less than you make, avoid debt like the plague, and invest everything that's left over into index funds. Understanding that it's a marathon and not a sprint, having the basics under control cannot be stressed enough. The Meaningful Money Handbook stands out for its straightforward language and practical approach. It's tailored for readers who want to grasp the essential financial concepts and take concrete steps towards financial security and freedom. Whether you're a beginner or looking to refine your financial strategies, liabilities. This book offers valuable insights and actionable advice for managing your money effectively. Matthew emphasizes the importance of building a solid financial foundation, which includes creating a budget, managing debt, and establishing an emergency fund. These basic steps are essential for financial stability. The book covers different investment options, explaining concepts like stocks, bonds, and pensions in an accessible manner. Matthew guides readers on how to start investing, the importance of diversification, and how to choose investments that align with your financial goals and risk tolerance. Books up until now cover the simpler concepts of money. Now we can go over some of the lessons from the best investors. And this is where some of the books start to introduce things like investment strategies, tips, and picking stocks. The Intelligent Investor by Benjamin Graham is a classic. It is now a little bit old, but it does go over some important principles. He's widely considered the father of value investing and has inspired the likes of Warren Buffett. So if you are a student of Warren Buffett, then you're a student of Benjamin Graham. The Intelligent Investor offers timeless wisdom on investing that remains relevant even in today's fast-paced financial markets. Graham emphasizes the importance of a defensive and long-term investment strategy, advocating for a mindset of owning shares in companies rather than speculating on short-term price movements. He introduced the concepts of value investing, where investors seek out undervalued stocks and invest in them with a margin of safety. One of the book's key lessons is the differentiation between investing and speculation. Graham argues that investing involves thorough analysis, a focus on fundamentals, and a long-term perspective, and speculation, on the other hand, relies on market trends and short-term price movements, which are often unpredictable and volatile. Graham also introduces the idea of Mr. Market, which is an analogy representing the market's irrationality. According to Graham, we should take advantage of Mr. Market's mood swings, buying when the market undervalues the stock and selling it when it overvalues it. The book stresses the importance of diversification, risk management, and a disciplined approach to investing. Graham's principles provide a solid foundation for investors and guiding them towards making rational, informed decisions rather than emotional ones driven by the market fluctuations. So in summary, The Intelligent Investor is a must-read for anyone interested in investing. Its timeless principles and practical advice continue to empower investors to navigate the complexities of the stock market with confidence and intelligence. The Little Book of Common Sense Investing by John Bogle. This is another must-read. The author is the founder of Vanguard and is a pioneer in index fund investing. In a time when everyone tried to beat the market with great stock picks and then charge expensive fees for it, John Bogle thought, why not just mimic what the indexes are doing and not manage anything? This little thought turned into one of the most prevailing investment ideas of the following century, and he created one of the most respected investment companies in the world. Bogle's invention, the index fund, is still one of the safest and stress-free ways of investing today, and in this little book he outlines why and how you can get started with one. Here are 3 lessons about the power of index funds. Actively managed funds suck because past profits don't guarantee future success, because the majority of your money is best invested in safe, low-cost index funds, and you can't go wrong by just choosing the cheapest index fund. I would really recommend this book, and I own Vanguard index funds myself because it's easy to see the point of this strategy. It's called The Little Book of Common Sense Investing for a reason, and it's only a 200-page read, so definitely worth investing your time into this one. One Up on Wall Street by Peter Lynch. He is one of the best investors of all time, and this book contains countless practical lessons. It really is a classic investment book that offers insights into Lynch's successful stock picking strategies. Now, Lynch advocates for the idea that individual average investors have unique advantages over industry professionals working in financial firms. He encourages readers to invest in what they know, emphasizing the importance of observing everyday life and recognizing investment opportunities in familiar products and services. The book also highlights Lynch's investment philosophy, which focuses on leaning in investing in companies with strong fundamentals. He provides valuable insights into various types of stocks, detailing how to identify and approach each category for investment. A good lesson from the book is that the best investors operate like an outlier, finding opportunities where there's less competition. A great quote from the book is, "Long shorts almost never pay off. No matter how bad things get, people still eat cornflakes." And the idea here is to apply this quote whenever you think to invest in the next upcoming stock promising to change the world. The 4-Hour Workweek by Tim Ferriss is now slightly dated, but it was revolutionary when it was released and has very valuable lessons. It's a guide to living more and working less. Ferriss advocates for lifestyle design, urging readers to embrace the concept of passive income and automation to escape the traditional 9-to-5 grind. He explores methods for outsourcing tasks, generating income online, and achieving financial freedom. The book emphasizes the importance of time management, mini retirements, and prioritizing experiences over material possessions. Ferriss provides practical strategies for creating a life of freedom, allowing individuals to work only a few hours a week while maximizing their quality of life. For me, this book helped change my perspective in many different ways and helped create a mindset shift in how to work and how to make money. The Millionaire Fastlane by MJ DeMarco reminds you that you are the driver and owner of your own finances. The author explains there is no such thing as get rich easy, but there is such a thing as get rich quick. He talks about how there's 3 financial paths in life. Number 1, there is the sidewalk. These are people who spend more than they earn. They sacrifice tomorrow for today's pleasures. This keeps you trapped in the cycle of being paycheck to paycheck. The second path is the slow lane. This is taking the safe path, getting good grades, getting a good job, and saving a portion of your paycheck every month, and putting that into investments and being able to retire comfortably at 65. The issue is that this is the slow lane and you are trading your time for money. And then there's path 3, which is the fast lane. That's leveraging your time to create passive income. So that means investing your time into a product or system that's capable of earning an income long after your original time investment has been put in, which then expands your income potential. The author does explain that it's not easy and it comes with a lot of hard work and discipline. The Cashflow Quadrant by Robert Kiyosaki is a follow-up to his best-selling book Rich Dad Poor Dad. In this book, Kiyosaki introduces the concept of the Cashflow Quadrant, which is a tool he uses to categorize the different ways people earn income. Kiyosaki's Cashflow Quadrant divides income earners into 4 categories: employees, self-employed, business owners, and investors. He argues that your position on this quadrant has a significant impact on your financial well-being. Employees and self-employed individuals often trade their time for money. In contrast, business owners and investors create their wealth through systems, assets, and smart investments. The book explores the mindsets and attitudes associated with each quadrant, shedding light on how different individuals perceive and approach money. Kiyosaki emphasizes the importance of moving from the left side of the quadrant, which is E and S, to the right side, which is B and I, to achieve financial freedom. It's a thought-provoking book that challenges conventional beliefs about money and work, and it does probe the reader to reassess their approach to earning income and to consider alternative paths to financial success. So these were just a selection of books that I've read, and there's plenty of other great financial books that I've missed out, but hopefully this video gave you an idea as to what's out there. One thing I've realized when reading these books is that there's no shortcut when it comes to investing. You have to be patient, and good things comes to those who wait. There really is no secret formula, because if there was, then everyone would be doing it. It's clear and somewhat reassuring to see that from reading these books that sometimes even the best investors can get things wrong, and there's just so many factors that we can't control. Investing is more an art as opposed to a science, and it's always better to approach investing by taking your emotions out of it, but of course that's a lot easier said than done. If you like this, you might like to check out my other video over here. Thanks for watching, and I'll see you next time.